Hello, my name is Eddie Tofpick. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's your weekly technical analysis of New York and London coffee markets. I'll start with New York coffee. Since the pacification of the market around the two lesser Fibonacci levels at 174.45 and 174.55 back in early August, prices have tried moving back up but found it hard. Initially, the move up over the recent 50% Fibonacci line at 182.75 looked like it might provide something, and we did indeed see prices push up over the very recent 50% Fibonacci line at 196.20, even as high as the 200 level. However, though they managed on numerous attempts to push up over this 50% Fibonacci line, there was only one close over it, only the one. Thus, there was no confirmation of the intent of the move higher, and consequently we saw prices fall away again in disappointment, I suspect. Interestingly, the true cap on the market during this time was the November 2014 high at 201.30. Anyway, the falling away in the early part of September only managed to stabilize around the old 2015 high at 187.40, though I suspect it is perhaps more likely that the market was cautious about testing down to the recent 50% Fibonacci line at 182.75, at least until last week. You see, last week prices did indeed test down to that 182.75 level on the Monday and even closed on it. But that was all. The very next day we did have an indecisive doji cross, but it was a higher one. And I suspect it was more a manifestation of the market's unwillingness to try low once more. Yet that was not all. The move up last week was strong enough to make it a weekly key reversal up, which may not have been that surprising as the previous week was effectively an indecisive spinning top. Anyway, the key feature apart from the weekly key reversal up was the close over the very recent 50% Fibonacci line at 196.20. Thus today we are looking for a confirmation of last week's move higher. Now we did get a second consecutive close over the 50% Fibonacci line, but it was barely over it. And what was further disconcerting was how it was made, with an indecisive doji cross, as if the market was still unsure about the move higher. This is important now, in timing as I highlighted earlier. A possible pattern may have formed since August. A possible ascending, broadening wedge pattern. A not uncommon pattern, though not seen everywhere either. We've had two touches on each side, with a third on the downside over last week and the week before. Thus it can be verified, but I'd like to hold off for a week or so, as we may have another pattern forming as well, an ascending triangle with the flat cap in the 201.30 area and the uptrend that makes up the lower trend line currently at 185.55, the same early August to date breach but still seemingly valid uptrend of the same move as the ascending broadening wedge pattern. The next few days here could be crucial in fully determining if any pattern, or if any pattern is the dominant one. London coffee. I very well remember many weeks ago saying, and I quote, "I have deliberately left the broken early April to mid-May bullish Andrews pitchfork on this daily chart. In the recent past, this pitchfork has been crucial in setting the timing for the moves higher, by having broken both the upper time, currently at 22.20, and the lower time, currently 20.66. You'd think it would no longer be valid. However, not so. Most recently, the broken lower time has started to once again indicate the bullish angle attack of the market. Now, this may only last a few days or weeks. However, whilst it works, I'll keep it." End of quote. Well, you can see how, especially over the last month and a bit, how valid this has been, this upper broken time, as a dynamic resistance, and the middle time, currently at 21.43, initially a support, and most recently today as resistance. The broken bullish Andrews pitchfork nevertheless still shows the bullish angle of attack, so I will continue to stick with it until I find something better. And that may be sooner than many expect, as we have a possible triple top crown style pattern formed over last week, resulting in today's decline, almost gapping decline, that closed below the middle time. Now, I am not saying that this is the end of the move higher, not yet. It is, however, a warning call, and with enough of a move now to test down to the lower time, should we do so, then the integrity of the move upwards will still remain intact, unless we see consecutive closes below the lower time. Even then, it may not be over for the bullish incentive, as we have a lot of congestion support from 2013 down to 1962, which may temper any bearish incentive and even the bullish incentive, but it will not extinguish it. Not the bullish incentive, not yet, not necessarily yet. Thank you for listening. This weekly broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Topic and ADM Investor Services International Limited. And here comes the final bit.